Hello, everyone. We're here for our final episode of The Cut, Season 1. We've got a very special guest to finish off the year, Adrian Parker. He's a General Manager of Specialised Agribusiness Solutions. How are you, Adrian?
Very well. Very excited to do this. I must admit I haven't done one of these things before, so hopefully it goes all right.
I think most of the people I've interviewed actually felt the same, but it's gone remarkably well. I think one of the great things that we have is that we do this a lot, but just not with a camera and a microphone. But, we want to cover off a number of areas today, and I think everyone's, in the previous episodes, we've always spent a bit of time just talking about where you've come from. And it'd be good to hear where you have come from. I mean, we've obviously known each other for a number of years, and it's through the insolvency and restructuring industry. But how about we just let you just give us a bit of background on where you came from?
Thanks, Simon. And look, as we chatted before, I probably have two objectives in getting out of this discussion. Certainly, I want to reflect on the career that I've had to this point and give your listeners a sense of where I've come from and where I am now. And then, as I said to you, the other objective for me, and quite shameless, is appealing to all of your insolvency and restructuring audiences and those that perhaps are looking for the next career move and sort of promoting banks and promoting agriculture, in particular CBA. So if that's a stated objective of today's discussion, let it be known.
Yeah, no, thanks for that. And so starting your career out, where did you start? What did you do?
So I have put down some things in writing because I thought this would be a good exercise in terms of cathartic. But look, in terms of my background and perhaps common or what is what was common in those years, around sort of prior to leaving high school, I made the decision that I wanted to follow my father and be an accountant. And whilst I perhaps wasn't the best student, I was pretty clear on thought. And so I applied to a number of accounting firms sort of mid-90s for what was in those years known as a cadetship or an undergraduate cadetship. So I was lucky enough to be picked up by the firm Ferrier Hodgson, and I started my career with Ferrier Hodgson in January of 96. I was interviewed by then Steve Sherman.
Yeah, right. Okay.
Day one, I worked for Max Donnelly and also John Malouish. I think as part of this process, if you don't mind, and if the audience doesn't mind, of course, I'll try and be as reflective on those people. But no, I started my career with Ferrier Hodgson in those years. This is well before Sarbanes-Oxley. This is well before the emergence of more independent firms. But in those years, I didn't know a lot. But those that were around me at the time, particularly some school faculty, they had suggested that Ferrier Hodgson would be a good place to go, as distinct from audit or as distinct from taxation. But that's where I started my career. If you want me to go a little bit further on that, I can. If you want me to talk more.
No, I mean, great advice from your friends getting into insolvency. I totally agree with them. I tax and audit, and when I did a little bit of tax at the beginning of my career and was hopeless at it. And insolvency, once I sort of joined the insolvency ranks, it was addictive. So
yeah.
And then you went on to after Ferriers. So you moved into what firm was that?
So I worked for Ferriers, and first employer, first full-time role, earning what I thought was a really good wage, studying part-time, and did my career. But when I got to about year 6 or year 7 at Ferriers, I did have a discussion with Max and others about next. And at that stage, not knowing anything outside of Ferriers or not another full-time employer, I then moved to what was Prentice Parbury Barella, which later became PPB. Again, interviewed by Andrew Smith, and also working for, in those years, both Max Prentice, Steve Parbury and Andrew Smith. But I suppose just thinking about that move, why that move, one employer since, and wanting to experience different management, different leadership. And also at that stage, I'd sort of not just worked out this sense of area of specialisation, which in those years was more terminal administrations as opposed to turnaround.
Yeah.
But I also felt working with the likes of Steve Parbury and particularly Andrew Smith, we could do more on that continuum of specialisation. And in those years, Andrew Smith, together with the likes of people like Ben Crawl, Steve Musso, and many others, we established what became PPB Agri Services, which again was a further pivot, not just sort of turnaround advisory, but really leaning on agriculture.
Yeah.
And that sort of set us on a path of doubling down on what would be my area of expertise today.
So was it at Ferries or PPB that you started to get a taste for agri? Like, was it a bit of both, or yeah?
Yeah, well, certainly at Ferries there was the odd file where in those years there wasn't things like mediation. Certainly farm debt mediation wasn't a thing back in the mid-90s, 2000s, but there certainly was files that were agri in nature. I can certainly recall working with the likes of Andrew Love and some other alumni at Ferries in this way. But Andrew Smith was also a former alum of Ferrier Hodgson, and certainly he was the genesis of the agri services. I think at that stage, some of the staff and the team that was around, they'd come from regional towns. Ben Crawl is very vocal about his upbringing from Orange, and certainly Steve Musso and Ben and others have gone on to have sort of really strong careers in agri. So I also probably felt at that stage, I remember having a conversation, which is a conversation I share sometimes, which is quite sort of humbling at the time, but I remember asking Ian Ferrier a question in my short career within the first month of what advice he would give me, and the advice was straightforward, and that was, specialise in something and have the market follow you. That's never left me, but I just think working for such good firms, such good partners, certainly coming from a very sort of working class background, that just aspiring for more. And as I said, I don't think I was the best student, but I think work ethic and just thinking about sort of where I was going to put my shingle. Agriculture was something I enjoyed. I enjoyed going regional. Still just thinking about some of the assignments that I'd had at PPB. There were a lot of regional assignments we had, and we had assignments managing vineyards. We had assignments managing abattoirs. We had assignments managing piggeries. We had assignments managing failed MIS schemes, albeit they weren't called MIS schemes in those years. They were just failed investments bordering on sort of misuse of funds. But nonetheless, this concept of taking assignments in region, spending sort of long periods of time away from city, all that appealed to me. And it sort of it was the best of both worlds, because I won't go further on that, but it was the best of both worlds, that you had a solid employment, you had this concept of working for a major accounting firm that was turnaround advisory, that you earned a paycheck of some sort of reoccurrence, and yet at the same time you were sort of in these regional towns trying to make things better. And I felt that very sort of purposeful. Yeah.
And look, if you had to pick one interesting job you did at Ferries or PPB, doesn't matter, what would you say was the one that stuck out for you?
Look, I certainly feel it. Look, I was certainly less. I was junior at Ferrier Hodgson, and there were some very great. There were some great managers and great partners, but my influence in those years was less. I was a part player or a bit player, and I was very impressionable, hoovering up a lot of things. By the time I transitioned to PPB, I was sort of what they would say middle management. I had more responsibility. There was more things that I had influence on. But to answer your question, there was a bit of a light bulb moment in one of the assignments. I want to sort of give you as little information as I possibly can without sort of embellishing on sort of confidentiality of the banks that were involved. But there was one that sort of it dawned on me that this could be a thing for my career, and that was the Mudgee Council, or what was called the Cudgegong Council Abattoir, which in those years was a service kill. It was a major employer of hundreds of staff. Quite often abattoirs are held up by transient workforces, and quite often those workforces support the general commerce of the town. But the influence and why I reflect on that is because, notwithstanding it was a long assignment, it was a fairly decent assignment of 6 to 8 months, and perhaps those assignments are a lot longer these days. So, I read the papers these days, and a lot of these sort of corporate workout turnarounds go for years. But in those times, early 02, early 03, I was 6 to 8 months assignment in Mudgee, living week in, week out with a team. But it was impressionable because of the scale of the impact of the workforce and what that meant for the town and or getting it right. These things were sort of not only leading into what was a significant corporate, producing or manufacturing beef at the time and sheep, but all the ancillary services and all the sort of ancillary GDP that hang off that abattoir. As it turns out, we did sell the abattoir at the time. It didn't reopen post-sale. That wasn't the intention. But in those years, we did what we thought was best. And we were always under instruction of the advising bank. At this stage, I'm not working for, obviously, CBA. I'm on assignment on behalf of PPB. But the significance of the employer and perhaps the magnitude of those decisions, it was lasting.
Yeah, and that's where you built up your awareness about this, the huge impact of one particular business in a regional town. On that town.
Yeah.
I mean, I did a boating business out at Nowra, and there was 60, 70 people. At that time, it was the second largest employer, and the impact of that having to close down was huge. And so that leads you into the passion for agri starts to sort of build in those years, and then you make a decision to move into the bank. Yeah,
so I think we're probably now hitting sort of mid 07.
Yeah,
and there was I was a what they would have termed as a manager in those years for PPB. There was probably a crossroads for me. I liked accounting. I love the fact that numbers determined a lot of things. Businesses often fail, as you know, in the role that you have in terms of poor books and records or not necessarily understanding cash versus accrual. So all those building blocks that I had gained through these firms and through what was the insolvency and restructuring industry, it was massively good for me. And I have many people to thank for tutelage. I have many people to thank for allowing me to observe and sort of be involved in some of these sort of these assignments. But I probably made the determination that for whatever reason, I just didn't see myself being a partner or whether I was going to make it to partner. So I won't embellish, but I just saw it as a pivotal moment. Did I want to be a partner either at these firms or other? And in reality, was I ever going to be a partner? Yeah. I think at that stage, mid 07, I'm on assignment for what was CBA. I remember travelling out to the assignment with the CBA banker, and I made some inquiries about potentially working for what was in those years the credit management unit known as CMU. I think today it's GCS, which is the group restructuring team. But I'd asked about this. I think at the time I was in conversation with the likes of Carl Turner. These names might resonate with your audience. Carl Turner, Ross Griffith. And whilst I was probably seeking a full-time role, they were possibly thinking about a secondment. As it turns out, it became a full-time role in late 07.
Yep.
At this stage, the word GFC wasn't in existence, but at the same time, the bank probably took a view that they needed to shore up personnel. But if I may, could I just sort of embellish a little bit? So I just want to give a plug also to that team at the time. So, I was interviewed by Carl Turner. I worked alongside Carl, Mark Vlosak, Sarah Hall, James Riley, James Burton, John Goldsby. There was a curiosity about working for a bank. At that stage, I was a CBA customer, but I was lucky enough to join CBA at that time. Again, thinking about career extension, I had many building blocks from what was the accounting and insolvency firms. Quite often, isn't it, that we have a lot of crossover as professional service providers to the banks. So that curiosity was there, and it was a natural step. And so October 2007, joining CBA, and just eyes wide open and very much ready to hoover up whatever was coming.
Yeah. So then you've spent a period. Let's fast forward a little bit to get into the agri role that you're now in now. So you've moved from GCS or whatever it was called at that time into now the agri space. So this is moving away from
Notwithstanding the GFC, and I know this isn't an interview about the GFC, and all of your audience would be very familiar with the GFC. A lack of confidence, lack of liquidity, collateral markets closed, cross-border, confluence of issues. But also during that time, notwithstanding working on non-agricultural files, I also was coming across, which was a natural suit, agricultural files. And in those years, 07, 08, 09, there was also the emergence of what is the Farm Debt Mediation Act, which was first legislated here in New South Wales. It branched out nationally, but at the time, Ross Griffiths, Carl Turner, Mark Vlosak, if there was an agri file that came through for repatriation or retention, I certainly got my fair share of those files. Now, rolling forward, and not embellishing on the GFC, rolling forward, at the time, the group executive was a fellow called Ian Narev, who later became our CEO. And, he was very much a supporter, and we were having a career chat somewhere between Ross and Ian. And it was agreed that if I wanted to, that I could join what was the bank's internal brand, regional and agribusiness. And so, with the sponsorship of my CMU alumni and also what was the group executive, Ian Narev, I moved across to join the bank's agricultural brand, which is their brand that survives today. Yeah, nice. And you haven't looked back ever since. So moving on to the current market. So, agri, has been very strong from an economic perspective in the last couple of years. Let's talk a bit about that and what you've it's been a very interesting couple of years for everyone with COVID and. But what we've seen is a very strong agri industry through a combination of various things. But of course, there's been flood and the disasters that they have to always seemingly have to face almost on an annual basis. So just talk about the last couple of years for the industry, what you've seen. Can I just give a plug first? I'd be remiss of me. I do want to achieve one plug.
Sure.
So I'll come back to that.
Yeah.
I just want to share a little bit about CBA and our regional agribusiness brand. So the way in which we're behemoth, massive bank, a real proud bank. A lot of things that we do, but one of our verticals is agriculture. It's certainly a thematic that the board, that Matt, our current CEO, and others want us to go further on. Right, so the job's never done, but we have a burning ambition to do a lot more in agri, and we're going to do that through our people, and we're going to do that through our platform. So that's the first point. And how are we configured today? We have over 700 employees under the regional and agribusiness halo. We're domiciled in 75 offices regionally, so non-metro business. We cover both agriculture, both pre and post farm, and we also cover commercial. So very traditional commercial businesses also in region, and so we're configured that way. The business that I lead in particular is our corporate business. We support a team in capital cities. We typically are handling large families, large corporates, both domestic capital, inbound capital, supply chain finance. So, to your audience, pre-farm being farm and farm production, post-farm being, when the crop or when the foodstuffs jump across the farm gate, post-farm, manufacture, value add, aggregation, supply chain finance, getting to their destinations, be it domestic or be it international. But that's the business that I'm involved with. That's the business that I've been involved with for 12 years. To your question and to your audience, shamelessly, if there's anybody out there who is thinking about next, if there's anybody out there in the accounting and or insolvency restructuring fraternity that would like to enter banking, particularly agriculture, highly recommend it. If anyone would like to enter CBA, by all means, you can try me on LinkedIn.
Or reach out to me.
Or reach out to Simon and we'll exchange details. It's very much a people-led strategy, but there's some things that we can get into later that might further promote why Agri. But I thought I'd just leave that plug.
Absolutely. No, right. I mean, and I'm all for that. So yeah, let's on the industry then. So the last 2 years, I'd say there's been significant growth. In that space.
Look, for those that have been in agriculture, it's always been sexy.
Yeah.
Right. Agriculture, at its very core, is renewable. Every year we produce foodstuffs. Every year we produce fibre in the sense of cotton and wool. But it's renewable.
Yeah.
Right. Every year it's seasonal dependent, and so what that means is we're dealing with no two seasons are the same necessarily. And in more recency, we've had favourable conditions. We've had a lot of water, and I'll come back to that. But that doesn't mean that farming or agriculture isn't without risk. But I think generally as an investable theme, as a long-term theme, it certainly is enduring. It's mapped off against population growth in the world. We ticked over 8 billion people last fortnight. In many ways, we're an exporter in the main, along with other exporters. So it is somewhat competitive, and I'll come back to that. But no two seasons are the same, and it's always been sexy.
Which is interesting because, like, if you look at other industries, and if I try and attempt to think of the thinking that goes through a bank when they're lending money, they're looking at seasonality, they're looking at consistent trends, and they're looking at the consistency in an industry. But with Agri, it's very difficult to do that.
Yeah, look, every bank will have their own intellectual property as to how they lend.
Yeah.
What I would say to you, all ag lenders would be familiar with some of these terms. But typically we assess things notably against character or management's ability to execute.
Yeah.
Typically we'll assess things on averages. So we'll look at cash flows on averages. We won't take the season that's coming, or we won't rely on the season that has passed to determine the future. We will take an average, whether it be 3 or 5 years. And typically banks will sensitise commodity price. They won't take the high, they won't take the low. They'll look through that on an average as well. And we'll also be assessing the repayment capacity with the right buffers, interest rate buffers, or thinking about things from a P&I over a period before the balloon. But there is some there's an art and a science to it, but every bank will run their own intellectual models on this. But typically there's a cash flow that supports debt service and terms and conditions, and lastly collateral.
Yeah. And is it right to say that it has been a very strong couple of years? Yeah,
I mean statistically. Not just what I've said in terms of there being renewable, regenerative, and this feeding the world or clothing the world.
Yeah.
But if you think about a wealth store, if you think about diversification in many ways, and your listeners would probably know this as well, but Agri is a good hedge against wealth preservation. In most cases, it's not correlated to the equity markets. So when the equity markets struggling or on the skids, typically these private investments aren't marked to market as frequent. There's no more land necessarily in the world, so it's a limited resource in some respects, as is water. And so there's many things that influence ag, both as an investment thesis, but also for what it stands for and what it does.
Yeah.
You know what I mean?
You mentioned earlier about water and you wanted to come back to us. Do you want to embellish?
Yeah, so it's interesting, isn't it, that right now your listeners would also be reading and hearing a lot of to-the-minute issues of water. And, you know, for regional towns, this can be devastating, particularly the commercial businesses that need traffic, you know, passing traffic, passing commerce. And but there's no more resilient people than farmers. You know, if they think about all the things that they have to go to arrive at a cash cycle, they deal with a lot. It just so happens that they're dealing right now with water. In the past, they've dealt with droughts. In the past, they've dealt with floods, fires, diseases, plagues. There's many things that we throw at farmers, but they are quite an optimistic and resilient bunch. And the current water event here on the East Coast, whilst it can be quite acute for the town, it's actually a good profile for what will be the next 12 months, the next 18 months. This water will end up somewhere. It will either end up in the land for what will be a moisture profile. It will either end up in storages. It will end up in sort of lakes and other rivers in terms of environmental offsets. There's plenty of things where this water will end up, but as it happens today, it's impacting roads, it's impacting farms, it's impacting the ability for some of our farmers to get off what was their winter crop and or get on for what will be their summer crop. You know, it has been a La Nina weather pattern now for 2.5, almost 3 years on the cycle. And what that means is, Simon, is there's a lot more moisture in the system. Some have parlays where they might say, look, we can make money out of mud. We can't make money out of dust. So it depends on perspective. But in recent weeks, we've spent a lot of time on the road. We've certainly travelled great distances. That's part of the job. But I would say to you that farmers are very much an optimistic bunch. And to your point around, to my point around investable theme, I would say that in the last 10, 15 years, land values have compounded on average somewhere between sort of 9%. So if you think about that compounding factor for 10, 15 years, that's been driven partly around low interest rates everywhere in the world, and money having to find a home. So low interest rates certainly have stimulated M&A activity. It's allowed the large farm or farmer to buy the neighbour. Low interest rates around the world have seen sort of capital funds, domestic and overseas, having to deploy. Certainly in Australia, we have favourable laws permitting ownership. It's not always reciprocated, but we have seen and will continue to see inbound capital, either on a financial perspective, you know, in terms of, as I said before, uncorrelated returns, wealth preservation, or we'll continue to see capital coming in by way of sovereign funds as I think about food security and time ahead.
Yeah. And look, for that industry, they're extremely resilient. Like the ability to move from being in drought to flood and to handle it and to make a living from it is just extraordinary.
Yeah. But you've also got to realise that this volatility really does open up the access to a larger margin. You know, those that can generate, those that can execute, and on specification, as an example, grain specification, higher proteins, they will get a higher dollar versus those grains that are downgraded to feed. But generally, volatility opens up the door for greater profit utilisation for those that can get there. Yeah.
Technology, does it play a big role?
Massive.
Yeah. And then you talk about the 9% per annum growth. Is that been a part driver where you're getting more out of the per acre?
Yeah. So we said before that farmers are resilient, but farmers are also quite innovative or iterative. You know, you go back to Industrial Revolution, you move that forward. There's been sort of progress And farming techniques have changed in decades. We've got better farming practices today. We've got things like minimal till. We've got things like sort of crop cover. We've got things like organic fertilizers, call them sort of legumes. We've got better rotations. We've got better seed technology, better data technology. We've got a lot of drones. We've got precisions. We've got data. We've got the use of AI. We've got the use of non-human activities as well, in terms of driverless or robots. There's a lot of things that are mobilising, and these are frontier. These are last frontier items. But this is a in and around agriculture, whether it be on the input side, whether it be on the IP side, whether it be on the equipment side, whether it be on sort of data and insight side. There's a lot of things that have led to Australian farmers and farmers generally being a lot more productive and efficient. That's not to say in parts of the world, be it China, be it India, be it Africa, where that automation just hasn't landed. Now, in places like India and Africa in particular, they've still got to hold what is general employment. They've still got to hold general GDP. It's a very subsistence hand to mouth employment. You can imagine if they automated parts of those worlds, those continents, there'd be mass unemployment, and they wouldn't have the ability to food on table. And so the upside for those countries is very much around this, but also there's laws in those countries that don't permit industrial agriculture. In places like India, for example, it's pretty much restricted to owning only 20 acres. Right. Okay. So there's no ability right now for scale that you would see in Australia. Yep. And notwithstanding, in some cases we arrive at the same destination to the consumer. But it's your question was advancements, or your question was technologies. There's too many to explain. But to say that along the supply chain of what is agriculture, everyone's doing their job, massive investment from major corporates, but farmers continue to iterate every year, whether it be persisting with a tractor that can go longer, or better applications. But there's probably too many things that one could cover on this topic.
So if we look ahead now and we go into the next couple of years, and I take on board your earlier point that you can't look at next season because it's quite unpredictable. Like, is there sort of a view on where we might see the industry in the next 2 years? Is it hard to predict those kind of things?
Yeah, it's probably a specific question, because I could probably think about 3 or 4 case studies, and that wouldn't be reflective of the general market. But what I would say is this: all markets are somehow interconnected. So if I just sort of leave with your audience a couple of thoughts, what drives Australian agriculture, or what impacts Australian agriculture the most? There's probably 5 things, right? And these wouldn't be unfamiliar to ag bankers as well. But the 5 things that have the most influence on what we do here is roughly the weather, both here and overseas, because we are an exporter and we compete with the likes of North America, South America, parts of the Black Sea. Weather does have an impact, right, here and overseas. The second thing that impacts Australian agriculture is currency. What is the strength of the Australian dollar versus the US? In most cases, most commodities are quoted in US, and if you're an exporter, you clearly want a lower currency. The third thing is China. Notwithstanding what may be our relationship with China today, just thinking about this from a consumptive market, and where things were pointed, it does have an influence on here. The fourth thing is utility, or more precisely, the price of energy. Energy feeds through all supply chains, so whether oil or the cost of power, that certainly does have an impact on profitability. And the last thing would be ultimately supply and demand for what would be the underlying commodity. So, supply and demand of beef, or the supply and demand of grain, or the supply and demand of something. As an all market, just basic economics, supply and demand. So they would be broadly the 5 things that have the most influence on Australia. And sure, there's going to be more, but they would be that. The second thing I want to say to your audience is right now interest rates are quite interesting. So for the last 15 years, we've had low interest rates. I don't need to tell your audience about that, but what that's led to is a lot of M&A, cheap money. You asked me on the back of that, what do we see for the next sort of 18 months, 2 years? Yeah. And I don't have to tell your audience about this, but in the last 18 months, 2 years, if you think about low interest rates, that has been driving a lot of M&A activity. So your question was the next 18 months, 2 years, what do I foresee? It's probably a case of doubling down and embedding those investments. There's been a lot of money deployed in more recent years, particularly large inbound capital, domestic capital, large families buying neighbours. So just given rising interest rates and that being opportunity cost for cash flow, decisions about further expanding capital expenditure, paying back debt or dividend, it's more likely the next 18 months that we're going to see, and we are seeing consolidation of what has been M&A activity. So making sure that the acquisitions that one have made, or making sure that the strategies that people have deployed, embedding those strategies and making sure that the synergies that one was pricing in, that they prevail. So a slowdown in M&A, you think? Whether it's a prediction or whether it's going to continue, we're not seeing as much M&A activity right now. And I still think that that's because people are trying to work out, what does a rising interest rate environment mean? What does it mean on the inverse to valuation? I also suspect, and what we're seeing also, is that there are some funds that have benefited from the valuation creep, that they are also testing values and probably recycling their capital. But in no way does that sort of predicate what is an enduring theme. But your question was, and what is the forecast? I suspect it'll be just embedding those platforms that one has purchased over time. I think also more agri-specific or more Australian agri-specific, we've got a bunch of free trade agreements that we're moving through. We've certainly got to resolve, in some ways, our relationship with China. We've got to advance our free trade with India. We've also got a large population to the north of us, Indonesia, and also we've got what is a massive population in sort of subcontinent, be it sort of Pakistan, Bangladesh, India. Yeah. So there's many opportunities for the farmer. I think domestically, and again, those that are in ag, bankers alike, there's still much we can do on our home court. Logistics would be one, thinking about the efficiencies there. Ultimately, that cost feeds through to the price of what we produce, and that goes up against the international commodity. But there's many things that one can focus on, but I suspect it'll be a consolidation for the next 2 years, just as we work out interest rate differentials. But I still think that it's positive. And on the water story, on the outlook, that's the positive, that this water on the East Coast in particular will find its way, and that will be a more confidence for the next sort of 18 months in terms of planning profiles and crop production. Yeah, great. Well, that's a good insight on the agribusiness. And look, thanks for coming along, and thanks for being part of the final episode of the season, Adrian. And look, fascinating to hear about how you got to the agri industry and the passion you developed during the years of being in insolvency. And look, as you said earlier, there's great opportunities in the bank, particularly in the agri space now. That for those that have listened to you now and found that interesting, you can certainly reach out to Adrian or I to seek an interest. And for those accountants and lawyers that also watch the podcast, this gives you some great insights for some of your clients that might be in the agri space, and knowing that the banks have been very supportive. They've been out there. They've been, I know Adrian personally, and you travel a lot, and you're out there meeting the customers quite regularly. So thanks again today, and we're signing up for 2022. And Merry Christmas to everyone, and those that are having a festive season. And we'll be back in 2023 with some great guests. But we've finished the year off with a bang with our friend Mr. Parker, and thank you for coming along. No, thank you for the opportunity, and thank you for coming by. Yeah, appreciate it. Thank you. Adrian. Cheers.